Good afternoon, everyone. Hi, I'm Oliver Judd. I'm the Executive Director of NECA New South Wales. Today we have Manis Leontios, our own Superman from NSW, here to talk to you about the changes coming up in the superannuation legislation. Please welcome Manis.
Thanks, Oliver. I must say it's great to be here on the eve of end of financial year. Just to sort of give everyone a bit of an update as to what's happening with super leading into the financial year, shortly afterwards, and also what's coming up. Now, I understand that you're able to ask questions. There's a question section in the webinar menu bar, and also a little animated hand that you can actually raise if there's a question that needs to be answered. I'm happy to take questions at the end of the discussion. Definitely have enough time to answer all the questions you've always wanted to ask about superannuation. If that's okay, we'll continue on. Our discussion points for this afternoon is we'll have a look at what's coming up with end of financial year as far as super reminder is concerned, what else is coming up in super, and there is a lot going on in super. A little bit of a unsolicited plug for NSW, your industry super fund, how we can help, and then, as I mentioned, we'll leave enough time for comments and those super questions. Okay, just a bit of a disclaimer for any legal people that may be out there. The information that is in this presentation is intended as a general guide and should not be acted upon as personal financial advice. Please consult with a suitably qualified person before making any financial decisions. Now, if I've covered myself there legally, we can move on. So, as far as end of financial year reminder is concerned, I suppose the biggest one to take note of is that if the business is looking to make a super contribution this financial year and claim a tax deduction from the business's perspective, it has to be received by a super fund by 30 June 2013. Now, it's of particular note that 30 June 2013 this year falls on a Sunday, so this Friday, the 28th of June, is the last working day of the financial year. Important to note. So, when to pay super guaranteed, there hasn't been any change with this. So, realistically, as far as payment is concerned, it really depends on your fund's requirements and how you've been paying in the past. I'll use a completely random example here of NSW. There's a monthly payment requirement there. However, from an ATO or tax office perspective, the due dates for super guarantee remain quarterly. And as you can see, an outline of those due dates based on the SG quarter. For the current quarter ending 30 June, the requirement is for the 29th of July. Generally, it's the 28 days after the end of the quarter. However, with 28th of July being a Sunday, there is an extra working day's grace period. And you can see the remaining 2 quarters in this financial year, in this calendar year, the 28th of October for the quarter ending 30 September, and 28th of January 2014 for the quarter ending 31st of December. Okay, we'll move on. From the 1st of July, what happens? Well, I'm hoping that everyone knows that the super guarantee minimum amount will increase from 9 to 9.25%. So that's the minimum amount requirement that needs to now be paid from the 1st of July. Goes from 9% to 9.25%. Now, it's particularly important to note, depending upon the employee arrangements as far as salary and packaging is concerned, you may have some employees who are salary packaged or others that are just salary plus super. So it's important to note which arrangements the employees or sections of the employees are, as this may have an impact on whether it's an increase of 9 to 9.25% and no impact on their salary package, or if it is a packaged amount, does the 9.25 come out of the package, which may have an impact on salary. The other The other inclusion is the removal of the upper age limit for super guarantee contributions. What this means is that previously the employers were only required to pay super guarantee up to and including the age of 69. So for 70 and over, you weren't required to pay super guarantee. That has now changed. So as of the 1st of July, there is no upper age limit for super guarantee contributions, and the minimum amount for employees aged over 70 will be, 70 and over will be that 9.25%. Moving on, just to give you an outline of what the current scheduled SG rate change is over the coming years. As mentioned, it is 9.25 from the 1st of July and then scheduled to increase to 12% as at the 1st of July 2019. Now that's the current scheduled amount. There has been talk of possible delaying of the SG increase if a change of government comes through. That can be discussed and considered at the appropriate time. However, the scheduled changes are as per the outline. Now, you probably would have seen some government advertising that is coming through as far as the changes to super, and the headline one has been the increase from 9 to 9.25%, and also something to do with the lower income tax rebate for super contributions for those earning less than $37,000. I'll talk about that a little bit later on, but it's important to note that the government has been proactive with these changes, not just with the printed and TV press, but there has been emails and letters sent to employees updating them of upcoming changes. What else is coming up in super? Well, generally speaking, the government has introduced a number of different reform packages that start from the 1st of July this year. You may have heard of things like MySuper, which is a new, simple, cost-effective super fund replacing the existing default products or funds. Superstream. Now, please don't think that this is a really big stream. It's actually designed to enhance the back office of super. Securing super is about providing better information about the amount and timing of contributions and super payments for employees. And you may have also heard of the Future of Financial Advice, or FOFA. Not a cat's name, but it's aimed at providing confidence of retail investors in the financial planning sector. So some of these reforms will directly affect employers, NECA members. Let me run through the ones that affect employers, if that's okay. So, first of all, MySuper. Not super that's mine, it's actually a name called MySuper. And super funds are currently going through an application form and process with the regulator called APRA, the Australian Prudential Regulation Authority. And it's essentially going through a process to authorise super funds to offer a MySuper product, and this will commence from the 1st of July 2013. Super funds will be writing to existing account balances, letting them know, account holders and members, letting them know what's happening to their membership. So that'll impact members and employees directly, and that's has already commenced with some super funds, NSW included. From an employer's perspective, and this is where the impact is to employers, that future contributions for defaulted members, that is an employee who hasn't selected a super fund, these employees' contributions will need to go to a MySuper product from the 1st of July 2014. From the 1st of January 2014. That's an important date as far as an employer is concerned. So those employees, I'll just repeat that, those employees who haven't selected a fund under choice, who are going into a default fund situation, their contributions need to go into a MySuper approved product, super fund, from the 1st of January 2014. So, as mentioned, how does it affect the employers? 1st of January 2014 is the critical date. It's important to make sure that your default fund that has been selected has MySuper approval as you lead into the 1st of January 2014 date. The other aspect is that modern awards will be reviewed and amended to have a default fund list from the 1st of January 2014. Now there's a little bit of grey around this at the moment as to how modern awards will be reviewed, especially with a election before the scheduled date. But it's safe to say that the modern awards, based on the current information, will be reviewed to bring in MySuper funds as part of the default process. Superstream. Remember, this is not a really big stream. It's essentially geared around making the back office of superannuation more efficient. And that's to do with data and money transfers. So for super funds, which includes NSW, rollovers will start to become electronic, both data and money transfer, from the 1st of July this year. So it will mean that from a super fund's perspective, we'll need to communicate with other super funds electronically and have transfers between super funds happen electronically as opposed to the current check and schedule scenario. So that'll make the process of transfer rollover a lot more efficient. From an employer's perspective, it kicks off from the 1st of July 2014, where there will be a requirement for electronic contributions, both data and payments. They'll be encouraged and they'll be mandated through the ATO via penalties. So it's important to note that it will be split between employers with 20 or more employees. That requirement will commence from the 1st of July 2014, so a year away, just over a year away. And the other employers with under 20 employees or 19 and below, that'll commence from the 1st of July 2015. So how will it affect employers? Well, if you're currently remitting employee contributions to a super fund via a check and schedule, you will need to consider the new electronic means that are being proposed. Take note of the dates depending upon your the number of employees that you have. As a random example, completely random, NSW offers an electronic online facility that pays not just into NSW, but will soon be allowed to pay into other multiple funds, including self-managed super funds. Now, we're currently in the pilot stage of this process, and we're expecting to roll it out over the coming months. I would suggest early, later in the next quarter, earlier in the quarter after, August, September time frame. So watch out for this exciting new initiative. Okay, with securing super, this is where the government is looking at providing additional information to members and employees around their superannuation payments, both from a employer's perspective with additional payslip reporting and also from a super fund's perspective with additional reporting of contributions received to members. Now, this has been, you probably would have heard of it about a year ago when it was first proposed. It was proposed to commence on the 1st of July 2012. Then it was scheduled for the 1st of July 2013. However, there hasn't been any confirmation of that date. So we are not expecting that to kick off on the 1st of July 2013. That is subject to confirmation. I have heard dates that it may kick in now on the 1st of January 2014. However, it hasn't been confirmed as far as a start date. Legislation around that has been enacted. However, a start date hasn't been confirmed. So that's another thing just to sort of keep aware of, that the current payslip reporting may need to be enhanced in the coming little while to include not just super fund amount and super fund that it's being paid to, but an expected payment date. Okay, so we've gone through the major changes that are coming up. Some of the terms that you may have heard that you've probably thought, what do they all mean? I'd also like to give you a little bit of an update on some of the other changes that are happening. This is more from an employee's perspective, but it's good to know that this information is out there. These changes are coming up. You may have questions that your employees pose, it's important to know where to direct them to. So you can see here there's a number of different changes happening as far as from the employee's perspective. The co-contribution, the two headline ones are the government co-contribution has been reduced again. I remember when it first started it was 1,500 if you qualified for every 1,000 that was paid in after-tax dollars. That was reduced down to 1,000, and from the 1st of July last year that's been reduced again down to 500. However, if you meet the conditions and you are able to consider it, it is a top-up that the government provides, which to me is very worthwhile considering. The other introduction that's coming on the 1st of July 2013, which has been advertised by the government, is that employees who have assessable incomes earnings under $37,000, their super contributions that go into super, where there's a 15% contribution tax, super guarantee and so forth, that 15% will be rebated back to the super fund by the ATO as a low-income super rebate. So effectively, employees, people who are earning under $37,000, their contributions go into super without any tax being levied, up to $500. And you can see that there are a number of other initiatives that have been announced. Some of them have been legislated, others are still being considered. Now, just with some of the more recent government announcements in the budget that are currently either going through Parliament or are being considered, the bigger one here is the higher concessional contribution with super caps, and that's to do with the total amount that can be paid in on behalf of an employee out of what's called concessional contributions or pre-tax contributions. Now, these include the super guarantee, additional salary sacrifice, and possibly any other contributions over and above the super guarantee that come out of pre-tax dollars. Now, I'm hoping that people are aware that the current cap is $25,000 for everyone in this financial year. It used to be significantly different and based on your age. However, it is currently $25,000 for everyone. That is due to change from the 1st of July 2013, and that cap will remain at $25,000 for everyone except those that are aged 60 and over from the 1st of July 2013. It will increase to $35,000, and then those that are aged 50 or more, it'll increase on the 1st of July 2014. So there are some concessions that the government has provided there for the concessional contribution cap. However, for this financial year, it's important to make sure that you don't go over that concessional contribution cap of $25,000. That is for, as I said, super guarantee, salary sacrifice, additional employer contributions. There is a different cap that I'm happy to sort of take questions later for after-tax contributions. They don't get caught up in the same lower cap. There are also some other concessions around the concessional contributions where if you go over the cap, you will be assessed at your personal marginal tax rate plus some interest, as opposed to what the current situation is, which is effectively the highest marginal tax rate of 46.5%. And you may also apply to have those concessional contributions over the caps refunded back to you. However, that does have other tax implications. Okay, I won't go through all those other changes. Needless to say that there are a number of different changes that are happening. The super landscape is changing, so it's important to ask yourself, is the business ready? Am I able to field any questions? Not necessarily answer them, but field the questions that your employees may have, and who do I direct them to? Well, again, a completely unsolicited advertising here. This is where NSW is here to help. NSW, you may have known those that have been with NSW as the New South Wales Electrical Superannuation Scheme. We're now trading as NSW as part of our MySuper rebrand, or build up to MySuper rebrand. We were established in 1987 in part by NECA New South Wales, and we were set up specifically to service the electrical and technology industry, or the electro-technology industry as it's now called. And we are an industry-specific profit to members super fund. What that means is that if we generate fees over and above our costs, that is passed back to members as additional returns. So really, it's our industry fund. Now, for those that haven't spoken to me before or haven't contacted me, I'm here to help. So I'm the member and employer service representative. You can refer to me as the Nest Superman, if that reminds you of who I am. I've got a picture of me. Sometimes that's been edited. I have seen versions of me with a Mario Italian moustache, one that looks like Brad Pitt, which I don't mind. But that's me, and that's what I look like. My contact numbers are there, my mobile number and my email address, and I'm here to help the business and employees. Now, one of the things that I'd like to say about NSW, I mentioned MySuper and the application and approval process is concerned. Well, NSW is pleased to announce that we have received our approval from the regulator recently, and we will commence our MySuper offering from the 1st of July 2013. So what that means is that employees can rest assured, they can feel comfortable that they will be able to continue paying their default super SG contributions into NSW from the 1st of January 2014. As part of the service that I offer, I provide a health check to make sure that the super arrangements are working well. And that may be making sure that you're across the current updates, across the MySuper, across the default fund scenario, making sure that you're using the online super effectively and efficiently so that the resources are working as best as they can. I'm available for workplace meetings to have a chat and update with the staff, and I really encourage that. And they don't have to be NSW members. What we provide is an update on what's happening with super, and I reference it back to NSW. No unsolicited ads. Thanks for the comments out of the bleachers. Employee briefing updates, talks can be on site, and I encourage them to be on site. I know people are busy, but if we can schedule them around a toolbox talk, we'd love to sort of do that. And the two main items that I get asked from the employees is, can you help me with rolling over my other super, please? Answer to that, yes we can. And how do I take advantage of the co-contribution, especially from some of the apprentices with their parents' help. So really what you need to ask yourself is, does superannuation sit on the expense ledger, a 9, going up to 9.25% expense that you have no real return for, or is it an asset that employees know about, that they're engaged, and that you've got someone that can assist with that process? Okay, we're sort of getting towards the end of the discussion. I'd like to take a real quick summary of what we've looked at. With the end of financial year coming up, please be aware of the 30 June date for contributions that you wish to claim in this financial year. Don't forget, 30 June is a Sunday, so 28th of June, which is this Friday, is probably the date for most super funds, NSW included. Super guarantee increases on the 1st of July, 9.25%. Bear in mind whether you're salary plus super plus, or is it salary inclusive of, salary package inclusive of super, and there is no upper age limit from the 1st of July for the super guarantee. What else is coming up? We mentioned MySuper. Please be aware of that. We mentioned Superstream. We mentioned Stronger Super. So these are terms that you will start to hear a lot more of through some more government advertising over the coming months. Where do you go for help? Well, NSW is our industry super fund. We're here to help. Okay. Any comments and super questions? No? Look, you have my email address there. If you would like to send me an email with any questions that you may have or feedback on this webinar. It's the first webinar that I've done, so feedback is appreciated. And for those that follow the rugby league, go the New South Wales Blues tonight. We hope we can clinch the series and bring the series to a clean sweep in Game 3. If there's no questions, thanks for your time, everyone. Have a great day.